cause I got that mad cheddar. Bitches and Bitcoin go so good together. Make it rain with Bitcoin cause I like it way better.
Alright, good evening once again, folks. This is Shaib Mama, and welcome to Crypto Mama's channel. Today we are taking a look at EURUSD, and we are continuing our series from yesterday on what I posted concerning how to use a Sunday candle to catch a trade. And before we continue, if you are new here, make sure you subscribe to my channel and like the video if you enjoy the content I'm coming to share here. Let's start with what we are coming to do today. So from here, you can see that with Euro USD, you can see that long term, the long term trend of Euro USD is bearish. You can see it is clear, it's bearish. So long term, we are bearish on Euro USD. But when you come to the short term, when you come here, the last time the market made a low here, and it created this short term what high, it made a lower high here and created a higher high. It broke above this short-term high and also created a lower high here again. So what the Euro US is basically doing now is that we are retracing, and those who trade what's the name, chart patterns will draw lines like this, and maybe they will call it something like a flag, or I don't know, whatever it is. So when you look at this, you can see that we are bearish long term, but in the short term, we are making a retracement. So from here, what you expect now for the week is that for you to use the Sunday candle to be able to catch a trade, you have to get your weekly bias. We are not going to use all this long term bearish trend. We are going to concentrate on the current price movement. And the current price movement we are seeing is that the market has made a lower high here, and in doing that it created this order block. Let me make it bolder for you to see. It created this order block here, and also the market broke this area here. You can see this area here, the market broke it and created this high. So from here, what you expect is that you expect at least the market would trade back to at least this level, this high here, before even maybe continuing the downtrend. So possibly this is what you should expect the market to do. You expect the market to do something like this. You expect the market to do something like this. And if it's going to stop here, fine. If it's going to break above, that one doesn't concern you. But you expect the market to do something like this for the week. It can even break above here, but that is not your problem. All what you expect is that the market should do something like this for the week. So as now you have gotten your weekly bias, you know that okay, possibly the market will retrace to this other block here before continuing up to the old high that has been created on the daily. So now we know what we should expect for the week. So let's go to the 4-hour time frame and see what is happening. When you come to the 4-hour time frame, we can refine our order block. We can refine our daily order block like this. So in our 4-hour time frame, we can refine our order block to look like this. But when you also zoom out the 4-hour time frame, you see that this high here is what created this low. And this candle broke above that high. You can see it here. That candle broke the high, And in breaking that high, it created an imbalance in that region. This is the area of the imbalance between this candle and this candle. You know that this wick was not able to trade up to the high of this week. So within that region, that is an imbalance. So what you also do is that you mark out the imbalance. In the previous video, I told you that you always expect the market to trade to these things: an order block, an area of an imbalance, a gap, or an old high or an old low. I've marked out our areas of interest. So we expect the market to at least trade to this red zone here or continue to our green zone here before going to our high here we marked in the daily. So let's go to our hourly time frame. So in our hourly time frame, we can now mark our Sunday candle opening. And this is our Sunday candle. You see this this black candle here. Let me zoom out on it for you to see. This black candle here was on Friday, and this candle here was created on Sunday, that is today. Let's mark the opening of today's candle. So the opening is here. All right, and what did I tell you? I told you in the last video that when you mark out your Sunday candle, Sunday opening. So I told you when you mark out your Sunday candle, you expect that if you expect the market to go down, it should at least trade up for some time before going down, and it should trade to the items I told you about in the other video. That is an area of an order block, an old high, a gap, or an imbalance. But there's what? There's an old high here. There's not an order block here. There's an old high. And we have a gap too. You see? When the market gap down here opening, you can see that the market is now doing what? It's closing up that gap. So we expect that the market will close up the gap and possibly trade up to the above this old high before going down. But the market can just close the gap and go down. That is one thing too. It doesn't necessarily have to go back and hit this or the high here. It can just close in the gap and go down. So when it closes in the gap, you can start going to your lower time frame, let's say your 5 minutes time frame, and start looking for market structure shift within this region to trade the leg down to this area or this area. Or the next thing you can do is that you can wait until when the market comes back to the opening of the Sunday candle and close below it before you can then start looking for an opportunity to trade from this area here, from the opening here to this area or this area here. And when we get to these two zones around here, you are not more interested in looking for short, because you already know that there's a daily order block which is in this green zone, and there's a 4-hour imbalance which is in this red zone. So in this area here, that is where you are interested in taking the trade to the upside all the way to the old high here. This is the area you are interested in taking that trade. These two areas here and here. So what you are going to do is that you have to wait until we get here before you can take that trade. And you can also start looking for trades around here if you are good enough, or you have to wait until the market closes below the opening of the Sunday candle before you can start looking for trade to our areas of interest. And when we get to the areas of interest, you are no more interested in what? Selling the market. At that moment, you are interested in buying the market to at least the daily high that we marked out